America is staring down the barrel of a debt crisis. The signs are everywhere, from the bustling streets of Wall Street to the quiet suburbs where families are feeling the pinch. The stock market is volatile, and the economic forecast is grim. Dark clouds are gathering over our financial landscape, signaling a storm that could affect every American. It's big, it's scary, and it's affecting millions. Families are struggling to make ends meet, and the unemployment lines are growing longer by the day. The anxiety is palpable as people worry about their future, their jobs, and their ability to provide for their loved ones. This crisis is not just a series of numbers, it's a human tragedy unfolding in real time. We're talking about record-high defaults on loans. Credit cards are maxed out, and people are struggling to pay even the minimum balances. The financial charts are alarming, with red lines climbing higher and higher, indicating a surge in loan defaults. This isn't just a blip on the radar, it's a significant and growing problem. Student loans, auto loans. The burden of debt is crushing, especially for young people just starting their careers. Recent graduates are entering the workforce with massive student loan debt, and many are finding it difficult to secure stable employment. Auto loans are also a significant concern, with many people unable to keep up with their payments, leading to repossessions. Even mortgages are starting to wobble. Foreclosure signs are becoming a common sight, and families are being forced out of their homes. Mortgage applications are being denied at an alarming rate, leaving many without the dream of homeownership. The housing market, once a symbol of stability, is now a source of anxiety for many. This isn't just about numbers on a spreadsheet. These are people's lives. Families are sitting around their kitchen tables trying to figure out how to stretch their paychecks to cover the bills. The stress is taking a toll on mental health, with many feeling hopeless and overwhelmed. An empty wallet is more than just a financial issue. It's a symbol of the struggle and sacrifice that many are enduring. Families struggling to put food on the table. The sight of an empty fridge is becoming all too common, and food banks are seeing record numbers of people seeking assistance. Children are eating simpler meals, and parents are going without to ensure their kids have something to eat. The basic necessity of food is becoming a daily challenge for many. Young people drowning in debt before their careers even begin. The weight of financial obligations is crushing, and the stress is evident on their faces. Recent graduates are finding themselves in a precarious position with mounting bills and relentless debt collectors. The promise of a bright future is overshadowed by the immediate reality of financial hardship. The American dream is turning into a nightmare. The symbols of prosperity and success are now overshadowed by economic despair. Abandoned houses and closed businesses are stark reminders of the financial turmoil gripping the nation. The dream of a better life is slipping away for many, replaced by uncertainty and fear. So, how did we get here? The timeline of economic events paints a clear picture of a series of missteps and unfortunate circumstances. Experts are dissecting the crisis on news channels, and the headlines are filled with alarming news. The path to this point has been fraught with challenges, and understanding it is key to finding a way out. Well, it's a perfect storm of bad economic news. Inflation is soaring, making everyday goods more expensive. Interest rates are skyrocketing, making borrowing more costly. And the COVID hangover? Yeah, it's still lingering. The pandemic's impact on the economy is still being felt, with many businesses struggling to recover. Buckle up, folks. The road ahead is going to be bumpy. We're diving deep into America's debt crisis. Stay with us as we explore the causes, the impact, and the potential solutions to this looming disaster. It's a complex issue, but understanding it is the first step towards finding a way out. Together, we can navigate these turbulent times and work towards a brighter financial future. Let's talk plastic, credit cards. These little pieces of plastic have become an integral part of our daily lives. From buying groceries to booking flights, credit cards offer convenience and instant access to funds. But there's a dark side to this convenience. Those little rectangles of instant gratification can lead to big problems if not managed properly. They can be a double-edged sword, offering financial flexibility on one hand, but also the potential for significant debt on the other. They're more dangerous than ever. With the ease of swiping or tapping, it's easy to lose track of spending. Before you know it, you're staring at a mountain of debt. Americans are racking up credit card debt at an alarming rate. The numbers are staggering, and the trend shows no signs of slowing down. Total debt just hit $1.17 trillion. That's a mind-boggling figure, and it's growing every day. That's trillion with a T. To put it in perspective, that's more than the GDP of many countries. And guess what? People are struggling to pay it back. The burden of this debt is crushing many households. Defaults are through the roof. More and more people are unable to meet their minimum payments, leading to a surge in defaults. Lenders are freaking out, writing off billions in bad debt. This has a ripple effect on the entire financial system. It's a full-blown credit card meltdown. The impact is felt across the board, from individual consumers to large financial institutions. Think about it. Everything's more expensive. Groceries, gas, rent. The cost of living is rising and people are turning to credit cards to make ends meet. People rely on credit cards just to survive. It's a lifeline for many, but it's also a trap. But those sky-high interest rates, they're killers. The average interest rate on credit cards is over 16%, and it can go much higher. It's a vicious cycle of debt. High interest rates make it nearly impossible to pay off the balance, leading to more debt and more stress. The credit card crunch is real, and it's affecting millions of lives. Remember those carefree college days? Yeah, they come with a hefty price tag. Student loan debt is crippling an entire generation. We're talking $1.6 trillion in debt. Trillion! And the worst part? Millions are defaulting. The government paused student loan payments during COVID. But guess what? That grace period is over. And now, the government wants its money back. It's a disaster waiting to happen. Millions face losing their wages, their tax refunds, even their social security checks, all because they dared to dream of a college education. Ah, the open road. The American dream on four wheels. But that dream is turning into a nightmare for many. Auto loan defaults are surging. Why? Because cars are expensive. Remember the chip shortage, supply chain issues? Yeah, those haven't magically disappeared. Cars are still pricier than ever, and those higher interest rates, they're hitting car buyers hard. People are stretching themselves thin to afford basic transportation. But when those monthly payments become too much, the car gets repossessed, and the debt, oh, it sticks around like a bad smell. So, how did we get into this mess? The current economic landscape is a complex web of interconnected issues. It's not just one thing that led us here, but a series of events and decisions that have compounded over time. It's a perfect storm of economic turmoil. First, we've got inflation. Inflation is when the prices of goods and services rise, reducing the purchasing power of money. This means that over time, your money buys less and less. Prices are going up, up, up. This isn't just a minor inconvenience, it's a significant issue that affects everyone. From the cost of groceries to the price of gas, everything is becoming more expensive. Like a rocket with a faulty engine, the economy is struggling to take off. The more we try to push forward, the more we seem to falter. Groceries, gas, rent, everything costs more. This isn't just a problem for individuals, it's a problem for businesses too. Higher costs mean lower profits, which can lead to layoffs and even business closures. Then we've got the Federal Reserve. The Federal Reserve, or the Fed, is the central bank of the United States. It's responsible for setting monetary policy, which includes managing interest rates. They're trying to fight inflation by raising interest rates. The idea is that by making borrowing more expensive, people will spend less, which should help to bring prices down. Sounds good in theory, right? But in practice, it's a bit more complicated. Higher interest rates can also slow down economic growth, making it harder for businesses to expand and for people to find jobs. Except it makes borrowing money way more expensive. This affects everything from mortgages to car loans to credit cards. When interest rates go up, the cost of borrowing goes up too. Mortgages, car loans, credit cards, everything just got pricier. This can put a significant strain on household budgets, making it harder for people to make ends meet. And let's not forget about the COVID hangover. The pandemic caused unprecedented economic disruption, leading to business closures, job losses, and a significant hit to consumer confidence. The economy is still shaky, people are struggling, jobs are uncertain, many businesses are still trying to recover, and the job market remains volatile. It's a recipe for disaster. All these factors combined create a challenging economic environment. Navigating through this storm requires careful planning, sound policies, and a bit of luck. Behind all these statistics are real people. Families struggling to make ends meet, young people drowning in debt. Let's put some faces to these numbers. Meet Sarah, a single mother working 2 jobs to support her kids. She's relying on credit cards just to buy groceries, but those high interest rates are killing her. She's trapped. Then there's John, a recent college graduate buried under student loan debt. He can't afford rent, let alone think about buying a house or starting a family. His dreams are on hold. These stories are heartbreaking, and they're becoming all too common. So, what's the solution? Honestly, it's a tough one. Experts are worried. They're saying the dam is about to break. That's not exactly reassuring. We need real solutions, not band-aid fixes. We need to address the root causes of this crisis. Inflation, income inequality, a broken education system. This isn't just about economics, it's about people's lives. It's time for our leaders to step up and find real solutions, because the American dream is slipping away, and we need to fight to get it back.